From Los Angeles, TraderInsight.com presents Dr. Adrian Manz in the war room and at the helm with today's look at stocks and sectors on the radar.
For TraderInsight.com, this is Adrian Manz, and this is Stocks and Sectors on the Radar for Monday, December 29th, 2008. On Friday, we saw a 47.07 move to the upside on the Dow Jones Industrials, closing at 85.15.55. 2,286 stocks advanced, 777 declined, and we had NYSE total volume of just about a half a billion shares. That price action leaves us exactly where we expected to be for the week. We talked about this earlier last week as well as the week before, that it looked like we were going to go out of the year right in the middle of the Dow box. I don't see any reason to doubt that's going to happen at this point. Looks like we're probably going to have a retest on Monday of some recent low points, probably down 50, 60, 70 points on the open, but we'll see what happens. If that happens, I definitely have a couple strategies that I want to take a look at in a few minutes here. But first, let's have a look at the rest of the indices. I think it's obvious to everyone by now that we're not really getting any leadership from the S&P 500, NASDAQ 100, or the NASDAQ comp, right? Everybody's going to go out right in the middle of the range for the year. Now, on Friday, that brought a lot of experts out of the woodwork. I watched a little bit of financial television. I usually don't do that because, well, those guys make me mad. But anyways, there they were again, talking about how the box that we're in right now, right, this Dow box, is evidence that a low is in for the year and we got to be moving higher. And I think that's just the craziest thing I've ever heard, especially since those same guys have told us on several occasions, right? Here's a weekly chart of the Dow. Beginning of the year, they were right there. They said, you know, we're down 2,000 points. We formed this broad, long basing pattern here. You had another Dow box within that box, right? Only tested the lows a couple times. That was evidence to everybody that there was no way that we were moving higher and that only a sucker would take his money off the table because, you know, all those stocks were going to go back up and retest 14,000. And, you know, lo and behold, a couple weeks later, there we were moving lower again. And we were in this range, which then we had all sorts of experts on telling us was a Fibonacci move and that, you know, there was going to be another thrust to the upside and we were going to retest 14,000 and move higher again. And then we had this move, right? So now we're down here and they're telling us the same thing again. That basing pattern is no longer than those other basing patterns were. We're basically in exactly the same kind of position as we were before, except this time we've got the news to tell us why we're there. We've got banks going out of business, we've got car makers going out of business, everything's going to hell, and these guys are telling us that this is the perfect time to go in there and try to find stocks to buy. Go ahead and bottom pick the market. And obviously that's not the case. We're traders, and what we're looking for is trading opportunities, and right now what the market is telling us is that for the time being it's content to drift sideways, and if the news gets worse, it's going to be more than willing to sell off again. Nothing but nothing is saying that the market has to go higher here. So, do I want it to go higher? Of course I do. Everybody wants to see everyone do well, but for the time being, I think that right where we are is where we're going to stay for a while, and that if anything, a move lower is likely to retest some of those lows that we've been talking about over the weeks. Now, on Monday, I'm going to take a look at the retail sector. We see here that retail is kind of perched in a precarious place, right? It's right up on top of the 50-period simple moving average, but it's been drifting lower. The closes aren't so great, and we know that the news over the weekend for the retailers was pretty bad. Specifically within the retailers, I've got a couple stocks that I want to look at. We've got Children's Retail Stores Incorporated, ticker symbol PLCE. Trade below 20.05 on this one is going to have me interested in a move lower that retests the recent lows that were in place over the past couple of weeks here, all the way back to the beginning of December. Then I've also got Abercrombie & Fitch. Same kind of a story. This one is up, testing its 50-period simple moving average. Previous reactions to that average haven't been great. You know, looks to me like we could see a thrust move back to the downside, back down to the area around the 20-period moving average there. We've had a couple of attempts to get out above this thing, nothing very convincing, and I think that this time around is likely to be the same if we have weakness in the retailers. If we don't have weakness in the retailers, then maybe we'll get a little pop on this one, up a couple bucks to retest that last thrust to the upside. But all in all, the retailers are just not looking so good, and I think that the most likely direction is down. Then we've also got Genesco Incorporated here, same thing, specialty retailer. Looks like it's already doing the rebound off the 50-period simple. Could see a move back down lower again. $16.70 a share is going to be my possible trigger price on this one on broader market weakness. And then finally, in the REITs, I've got Extra Space Storage Incorporated. This is EXR. EXR, if I see a move higher here, above $10.01, $10.05 maybe a share, then I'm going to see if we can't get a thrust on broader market strength. And it's important to say I'm going to be looking at the broader markets before I go taking any of these trades. Back up into the about $11 a share range. So if it happens, it happens. If not, it's kind of a long shot that we're going to see any kind of significant move on Monday anyways, because the volume is probably going to be pretty lousy. But if we see any of those kind of things start to happen, those are the trades I'm going to be interested in. Also got a couple trades on the trading plan that I'm going to be watching, but for the most part, looks like it's going to be another quiet week. Just make sure if you do get into anything, I'm going to be practicing what I preach. I'm going to go ahead and lighten my shares up. And as always, use protective stops on every trade. And for TraderInsight.com, this is Adrian Manz. And if I don't talk to you again, have a happy new year.